Will anything stop the rise of gold? It reached record levels in October 2025. What is going on? The common assumption is that investors buy gold in times of trouble. And yet, things aren't really that bad. US stocks are booming, interest rates are high. It's true, there are fears of a crisis. President Trump's tariffs and his standoff with China have threatened trade chaos. And an AI stock market crash could bring down the real economy. And yet, the world is not in a recession. What's more, gold hasn't reacted much to global events. This was Trump's Liberation Day, this was the ceasefire in the Middle East, and this was his truce with China. Another popular assumption is that central banks are swapping US dollar reserves for gold. With America's dysfunction, ballooning public debt, and threats to Fed independence, the argument is that gold might be a safer long-term asset. But where is the evidence? If American securities were being dumped, the dollar would be plummeting. And yes, it fell earlier this year, but since then it's actually been pretty stable. Long-term treasury yields would also be rising, and as you can see, they've been mostly flat. If gold's share in central bank reserves is up, that may be because partly its price is rising while the dollar is not. So that leaves speculators. Hedge funds in September built a record 200,000 long positions in gold futures. They were very confident the price of gold would rise. Exchange-traded funds were also buying a lot, but last month those flows dropped. That could explain gold's recent price dip. Since then, fund flows have rebounded, and look at how the gold price has reacted. It seems, therefore, that the gold price mostly follows what these funds are doing. This hype comes mainly from hedge funds and everyday investors. Central banks did pick up some gold, but that was early on, and that tiny signal has turned into a frenzy. Eventually, when the price falls, buyers who've planned in late may find their savings falling away.